Hello, it's John Piper with the weekend video clip, and it's Saturday the 5th of March. I've got a fair bit to discuss today. We'll start with gold. If we assume a low around 200 for sake of argument, we thought what I'm counting as a one wave up to there. We then saw a low around 1050. Assuming 200, this rally was around 1700. Half of 1700 is 850. This was 850. Okay, the 200 is a little bit arbitrary, but it's approximately correct, and the actual variance isn't too important. Right, that's the count 1, 2, and this would then be a 3 starting up, and it's looking pretty good so far. But let's go down a leg to see how it pans out in detail. Okay, so the low came in. This is the 4-hourly chart. Low came in there. So we have a 1, 2, 1, 2. I count this as a 3 basically. This is a 4. Actually, it was a triangular 4, wasn't it? So let's to there, I think, and to there. So this could be a 5, but as we had a 1, 2, 1, 2 down here, we'd expect perhaps a bit more upside. I was hoping for a third of a third breakout. Can't rule it out completely. I mean, we have hesitated. I've taken a few profits on my extreme stops here. The key level to watch is actually the triangle again. I mean, often you see the retest of the triangle. So if around 1250 that holds, then we could see a substantial bounce from there. It goes back inside the body of the triangle around 1240. That would be a negative sign suggesting we have seen a wave 4, and that we're going to see a correction before we see, or at least we're going to see hesitation before we see too much more upside. Okay, so let's look at the gold miners. This is a chart of GDX. This is another monthly chart on Yahoo Finance. And basically we've got the 2009 low there. Let me get the thing working there, which I think you can see. Nice thrust up again, but then this huge great decline here took us down to about 10, I think. We've now seen, you see the volume is increasing on the purchases, especially here. Very nice volume there, and we're now starting to hesitate a bit. So again, a similar chart pattern to the gold itself. Let's go down a leg. You see the low was around 13 or so. High was around 21. So an 8 13th, not about 60% or so. Quite a nice move in this year so far. I didn't catch low by any means, but I'm now in profit on these positions. Yeah, it doesn't actually. I mean, the chart doesn't really help us very much. I was hoping we might see a clear sort of third wave pattern, but we're not getting that. We're just getting a possible peak again. So again, I think especially with a 60% rally, there's a fair case here that we're going to see gold pull back in the shorter term before another rally comes in. So maybe we should take some profits, look to reposition depending on your view on gold. Also look at silver this morning. Another huge great rally. Another huge great fall. I mean, from 48,000 or plus down to 15,000 is certainly a pretty massive fall. That must be a decline of around 60-70%, I guess. Yeah, certainly 2/3. Have we seen a low here? Let's go down another leg. This is the hourly chart. We can see the low here around 14.6. We can see 5 waves up. 1, 2, 3, 4, 5. 2 wave. 1, 2, 1, 2. 1, 2, 3, 4, 5. So similar pattern to gold, really. It's all happened very quickly. This, I mean, it's only started on the 29th of February, so it's only 2 weeks old. So there's a stronger case here that we're going to see more upside more rapidly. I wouldn't expect a significant decline at this point, unless it's not all an ABC. If it's an ABC, then it's already over. But if this is a fourth wave, maybe like this, then we could see some more upside action pretty quickly. That's another market worth looking at, I think. Right, China next. This is the weekly chart on investing.com. You see the peak here. I count this as a 5. It was a 5 on IG. It's not actually here, but it could be. And ABC actually makes a difference. So it's an ABC followed by a B, so it could be an A, B, and this is the C wave coming in. with a correction now developing here. So let's have a look at that more. Okay, at this point I think we have to favour the count that we've got basically a 1, 2, 3, 4 and 5, and that this is an A wave followed by a B wave and then a C wave, so in which case it would be some weeks before we'd see a significant decline coming in China, but we could see something quite severe. And of course I could be wrong, it could go further down, so if that starts up, I'll be looking to go short into that, and probably also on the DAX and other markets. But essentially any move above here will confirm that count. If it takes out that high, then this must be correcting the larger move and not just that single move. This will be a fifth wave. It could be a complete fit. It could be the end of a big ABC type thing with a sort of flat correction. Anything's possible in the market. You just have to accept that. Okay, down to the 30-minute chart, we can see the low here, and we can see a 1, 2, 3, a bit of expanding triangle, 4, then a fifth wave, which could now be over, maybe one more leg up. So we're at the 3,000 level, 3-1. This could be the peak, so maybe an A, B, C, relighting the bear's hopes, but a rally may well come in from that point. So the bear squeeze may not be over at this point. I think that's quite an important chart. Right, so where are we on the DAX? So we've got this big clear ABC irregular, and this is the C wave. We've got 5 waves down. The wave count in wave 1 looks like an ABC, but it can be counted as a 5. That could be complete, similarly to what we looked on Japan. A, B, C. C is not yet the length of A, and it would be around the 10,000 level. We'll look at that in a bit more detail. Okay, so the low came in at 8.7. We take the peak, well, the 9.550 or 9.6 if you want to count it. 800 points up to 9.6 almost. 9.1 plus 800 points gives us 9.9, which of course is where we peaked actually. I think yesterday actually. So maybe the peak's already in, maybe that is a complete ABC, maybe we're not going to see 10,000. We've also got a 1, 2, 3, 4, and then a sort of staggering possible fifth wave up to there. So certainly a case with peaks. I wouldn't be surprised to see it go to 10. The action here is not really confirming very much, but let's go have a look at it in a bit more detail. You have to look quite hard to find a 2-wave here. There's a possible 2-wave there. I'm not very convinced by that, but let's just assume it's a 2-wave. That would then be a 3, 4, and a 5, followed by an A, B, C, and now the next leg down beginning. We'd need to see some pretty fast, well, I think we need to see probably opening downside action next week to confirm that pattern. I say that's rather dubious, but I'll keep an open mind about the DAX on Monday. If we start going down, I'll be selling it, because I think there is definitely a case. We've seen a peak at 9.9. A and B, actually, A and C are actually equal, so I've made a mistake there. And this could be impulsive, but stretching it a bit. This is definitely ABC, so that does encourage the view. This is looking impulsive. So let's have a look at the S&P. Alright, similar pattern in the S&P. We've got this A, B, C, A, B, C, rather truncated A wave down to there, B wave up to there, so it all stayed in quite a tight range, and then the big C down to there, and now another A, B, C with an irregular B. That could be complete. Let's have a look at that pattern as well. Okay, low is around 1810 here, so we count that as the A wave. That's 110, 20 points. ABC, 110 points on here, takes up to 2000, which is where we saw a peak of sorts around the 2000 level. So we have got a clear ABC here with a possible 5 waves. 1, 2, 3, 4. 1, 2, well, a bit truncated, but I suppose it's possible. And let's have a look at the action since that possible peak. Similar to the DAX, really not a huge amount to write home about. I mean, that looks pretty impulsive. Very short term though. That could be a two wave, or it could be the beginning of an ABC, I guess. But really, we need to see a break below there and some pretty fast action to confirm any kind of peak. At this point in time, the jury's out, really. Finally, look at this is the 1 minute chart of FTSE, just happened to come up. So, I mean, 6220 is a key level. I mentioned the 20s to you before. You can often sell if you see a peak around the 20 level and then you see a break below the hundreds. That can make for a very nice trade, in the sense you can sell, say, around 61.95 or thereabouts, 25-point stop, and you can catch some really big moves that way, which is a nice way of trading, obviously increase size, etc. But we've got a pretty impulsive move down to there. A, B, C, 1, 2, beginning of a 3. So acceleration below 6176 next week would be a good sell signal. Seems to be no particular reason why we should open and start pretty lower, but that's obviously a possibility to handle that when we see it. I'll just confirm the longer term pitch. Alright, so peak above 7.1 back in, I think, just into May. A, B, C. ABCs are quite confused patterns, they're not easy to predict, unlike 5s, it's a lot easier. ABC, B wave, and then we get this really jagged, what it is exactly I'm not quite sure, but it's just a series of lurches, all of which are overlapping, which looks corrective. In fact, we then get this sharp rally, which we'll look at in more detail, and you see it went down to about 5.5, almost exactly, up to 6,550 roughly, so that's 500 points, low here at 5,850. So currently the C wave is lacking, in the sense that if we add 550 to 5,850 we get around 6.4, but other markets have achieved similar patterns, have achieved equality, so it's unlikely FTSE will buck that trend, I think. So we have a possible reversal here, and it's really Monday morning again, which should be critical, and I'll be watching carefully to see what transpires. Right, that's all for today. I hope you found that interesting and useful. I'll be back with the report on Tuesday morning for subscribers. Still lots to play for here. I mean, we've got gold, possibly a hesitation. We've got equities, seem to be due to some kind of pullback. I mean, gold is not tied to equities. That's been pretty clear from what we've been seeing. Both have been rallying in the last, recent history. So equities falling back. It's quite possible gold will fall back as well. Right now, I would think any pullback on equities is going to be corrective, but it can still be quite deep, and it can still be quite aggressive. I would hope any pullback on gold was not deep and not aggressive. We'll see. Obviously, the markets will throw at us what they wish. So on that note, have a great weekend. Thanks for listening, and bye for now.